when you take a look at your income sources for retirement, there are a number of options. Of course, Social Security, your 401k or 403b. Maybe you have a pension with your previous employer, but there's also other assets that you may be able to draw income from, for example, a reverse mortgage, possibly even a home equity loan if, for example, you have expenses like paying for a child's education, you're retired and you're still helping out your child with education, maybe using the equity in your home is an option, and of course working.
Absolutely. I see so many people depend on just a very few income streams to make it. They think that 401k is going to take them all the way there, and they haven't explored the options. They don't know what the options are because they haven't consulted a professional.
And that traditional three-legged stool that people talked about of, the pension, the Social Security, and your personal savings is now maybe a five-legged stool when you add in working a little bit longer or having a job even in retirement and possible accessing the equity in your home.
Can we go back to the word income? Now, to me, when you say income, that means I'm making money and I'm paying taxes. If I have Social Security, I don't pay taxes. You mentioned reverse mortgage. Is this income? Is it taxable? I don't know exactly how the word is applied.
Some of that income may be taxable and some may not. Things like a 401k, a traditional 401k, as you withdraw money out of that, you have to pay income tax on it. And that's another planning concern. People look at that 401k balance as an amount that they're going to be able to spend in retirement, and often they're not taking into consideration the taxes that are going to come off of that 401k as it's withdrawn.
Are the tax levels the same as when you were working? What is it based on? If I'm paying on the 401k, now I'm paying about 30% income tax. Is it going to stay there?
Well, it's going to depend on your total taxable income in retirement. Now, the assumption is a lot of people are going to have less income in retirement, and therefore their tax rate, their marginal tax rate, will be lower as they pull the money out of their 401k plan. But we're seeing some clients, actually, their income doesn't really drop down that much because of income that they're receiving from their savings, the 401k, all that gets added together, and the income tax rate that you pay will be based on the total amount of taxable income you take that year.
Yeah, I have to agree. Income is so very important, and what we must consider as we plan for the future and also move into retirement is that we consult the professionals that are out there, that it is their business to advise others on these very important topics. And so take advantage of your resources and the professionals that are available to help us out.